Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock. With news, the realities of the post-pandemic bounce are showing it isn't being sustained on a global basis. This week won't be as busy on the economic data front as last week. It'll be mainly Fed watching in the US, plus PMIs and some key housing data there. China will review its monetary policy positions tomorrow, and that will come with eyes keenly watching for more economic stimulus measures. It has seen trimming its 1-year and 5-year loan rates by 10 basis points to align with last week's surprise cuts for shorter-term rates that were trimmed to support their property development sector. But it is more than their property development sector that needs shoring up. China was expected to recover and give the global economy a boost after it abandoned its tough zero COVID policies and reopened its borders late last year. Yet domestic consumer spending has tanked and trade has fallen. This weekend's big retail event has always been an important retail shopping day in China, 618, and there are signs that this will really drag this year. Not only are consumers tiring over the endless big promotions, households are back prioritising. Despite getting a new governor who was thought to be ready to declare victory over deflation, the Bank of Japan kept its short-term interest rate unchanged at minus 0.1% and that of its 10-year bond yields around 0% by a unanimous vote. It said it didn't move because of the high risk it sees in international economies. And Singapore's exports slumped in May and crashing very much more than expected. They've had a good run over the past 2 years, but from July 2022, there's been a steady and now increasing retreat. This data is kind of a regional canary. In the latest update of consumer sentiment in the US, this one from the University of Michigan survey, delivered a bounce that wasn't expected. June sentiment rose to its highest in 4 months, reflecting great optimism in inflation that eased and policymakers resolving the immediate debt ceiling crisis. In fact, that caps a year of rising sentiment, with this index up 27% from a year ago. In Australia, the pressure is coming on retail sales. At its monthly review, the RBA noted a substantial slowing in household spending, and this past week, many key retailers have been reporting retreating sales levels, some quite sharp. New data from buy now, pay later operator Zip shows a 7.4% slide in spending in fashion and clothing in the first 2 weeks of June compared with the first 2 weeks of May. And some other major retailers are signalling sales down 20% recently. Discounting has been turbocharged and the retailing industry is worried. US Treasury 10-year yield will start today at 3.77% and up 3 basis points from Saturday. And the price of gold will start today up $1 at $1,958 an ounce. And oil prices are slightly softer from Saturday, to be now just on $71.50 a barrel in the US, while the international Brent price is just under $76.50 a barrel. And the Kiwi dollar starts today up at 62.4 US cents, but that's little change from Saturday. But it is up more than a cent in a week. Against the Aussie, we're firm at 90.8 Australian cents. Against the euro, we're little changed at 57 euro cents. That means our trade weighted index is just on 70, a little changed from Saturday, but up 50 basis points in a week. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.